Hello again. Welcome to another episode of the Uranium Market Minute. Today is Thursday, December 9th, and this is episode number 48. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Before we get into it, as usual, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. Thanks so much for all the great comments yesterday with my discussion about capital gains taxes. There's obviously a lot of variances depending on where you are, but it's just one of those things that we keep in mind here in the United States when it comes to swing trading. If we have a long-term outlook for an investment, it makes sense most of the time to hold through volatility, to hold out for those long-term capital gains rates, which are half the cost of those short-term rates. I have a couple of notes on some comments from yesterday's video that I want to mention in the mailbag today. But before we do that, let's get into the daily scoreboard here. Pretty quiet day. Again, uranium, 44.75 a pound mid-market for the spot price of uranium, unchanged essentially from yesterday. Interestingly enough, with Sprott being largely out of the spot market over the past 3 weeks, the spot price has maintained its level in the mid 40s. This is really good to see. This is showing us that besides that slight bump down at the month end for the month of November, we're not really seeing a lot of action in the spot market or price manipulation pushing the price down for the spot price of uranium. So that's a really positive sign. The last time after the big run up, when Sprott took a little bit of a break, this was in September, we saw the spot price come down from 52 all the way into the high 30s. So it's nice to see it hold this level, despite the fact that Sprott has mostly been out of the market for almost 3 weeks here, 3 trading weeks. Yesterday, however, they did trade above that 1% premium to NAV for a short period of time, even though we had really light volume in the Sprott Physical Uranium Trust. They did raise an additional 3.4 million in new capital, and they bought 100,000 pounds of uranium yesterday. Because the money they raised yesterday essentially paid for the uranium they purchased, they still have almost 31 million in cash in their treasury. And since the 17th, when their ATM went live, they've now purchased 22.9 million total pounds of uranium, raised 998.3 million, another 1.7 million to get to that $1 billion mark since their ATM. Turning to the ETFs, as I mentioned yesterday, as we expected, the ETFs actually did report an increase in shares. 170,000 shares for URA, 50,000 shares for URNM, equals a mandated buying of 8.5 million. The combined AUMs actually also did increase from those outstanding shares increasing and the movement in the price of the two stocks by about 20 million yesterday. So they now sit at a combined 2.2 billion between the two ETFs. Looking at the market today, it's looking like we're seeing a little bit more backing and filling. I've been saying this, that I expect and actually hope for some sideways chop in the market. So I don't think we're going to see another crash, let's call it, or like a fast selling off. I think the bottom is in here. We could see another retest of the 200-day. Anything's possible, really. It's kind of a slow time of the year, typically, although last December we saw a lot of money come into the space. So we'll see how it goes, but a little backing and filling here. Let's look at the charts. URA down about 3% today, pretty light volume. Again, just not a whole lot of volume happening across the entire space presently. So I honestly expect we'll continue to see this chop sideways, a little bit down, a little bit up, not a lot of volume until we see actual institutional volume come back into the ETFs and into the Sprott vehicle. We're likely to not see any big moves in either direction. The broad markets, we could see a little bit more weakness, in my opinion, in the coming days or weeks, but I think we'll resume an uptrend for both the broad market and the energy sector and uranium. But yeah, this could move any day. And when we see things move, usually they move fast and hard, which is why we buy on the weakness when the market gives it to us, and we hang on. We try not to nail the bottoms and sell the tops and small intra-cycle corrections. Again, pretty small volume in the Sprott Physical Uranium Trust today, although it's even with multiple hours left in trading today, we still have larger volume than yesterday. So that's a good sign. Although the trust is down 2.75% on the day, seeing a little bit of dip buying happening here, but I'm sure, again, we're back at a just about flat in terms of NAV, maybe at a slight discount to NAV. So they're probably not issuing any shares, raising any money today. We'll see if they come into the market to buy any uranium with the 30 million they have remaining in their treasury. So a couple of notes on yesterday's comments. First person asked a comment, Justin, will you consider doing anything different with this channel in the form of long form interviews or any other types of content? Well, this podcast generally is intended to be shorter because I do it basically every day. It's mostly to stay abreast of the daily happenings in the market, the spot price movement, the flows, the ETF flows, the spot flows, and anything that's particularly noteworthy. And when the market's quiet, as it has been this past week, I can get into some different subjects regarding investing psychology and like the beta for the sector a couple of days ago, the tax implications yesterday. These sort of things I can kind of pontificate on this channel. When the market is slow and when it's moving, we can stay on top of those flows and make sure that we're all up to date with what's happening in the sector, because the sector moves so quickly when it does move. I had another question yesterday regarding when you purchase new shares for a stock, do you reset the clock of the long-term, short-term capital gains, which in the United States is 12 months? The answer is you start a new clock for those shares purchased. If you're already holding shares in the company, that clock is what it is from the date that you purchased those shares. And most brokerages, when you sell shares of a company, they do first in, first out. So if let's say you own 1,000 shares of a company and you purchased 100 share blocks over the course of 6 months, for example, if you go to sell 100 shares today, the brokerage considers that you're selling those first 100 shares that you bought to encourage the likelihood of that being a long-term capital gains implication. So they use first in, first out. And no, you don't reset the clock when you buy more shares. It has to do with each share that you purchase. When you purchased it, that's when the clock starts. So hopefully that helps with that question. I wanted to make one other note, and I'll link to it in the show description. I thought this was really interesting. The CEO of GoVX Uranium, Daniel Major, he mentioned as when he was speaking in a recent conference about some contracts, a contract that an Asian utility recently signed. And contracts can take any number of forms. So traditionally, let's say over the past decade, a lot of the long-term contracts that were signed during that time period by utilities with producers are partially spot reference and partially long-term fixed. So for example, a utility might have signed a contract with Cameco, for example, for a long-term fixed price of $40 a pound at 40% of the contracted uranium at $40 a pound fixed. So that means they pay that $40 a pound for all of the delivered pounds for 40% of the total, let's say, volume. At the time of delivery, they would pay 60% of the price of that contract would be paid reference to the spot price at the time of delivery. There's still a lot of legacy contracts that have yet to be fulfilled, where utilities have deliveries still out into the future, likely for the next few years, that are partially referenced to the spot price. And so this is one reason why utilities are largely staying out of the uranium market, the uranium spot market, because they know that any purchasing of meaningful volume in the spot market is likely to have an accretive effect on the spot price, therefore affecting their long-term delivery pricing that they would pay at the time of delivery that would be referenced to the spot price, at least partially for that contract. But so Daniel Major noted that this Asian utility signed a contract out to 2030. And of course, we don't know all of the details of this contract, but what he shared I felt was really interesting. This contract was it sounded like it was entirely a market reference contract. So rather than fixing the price at X amount of dollars, the producer wanted reference to the price, the market price, the spot price. Okay. Why? It's probably obvious. The producer knows the prices are going to be going up in the coming years. So they want reference to the spot price. However, they will utilize something called a ceiling price within this contract that'll give the utility some protection over potentially illogical and speculative overshot of the spot price, an overshoot of the spot price. So this particular contract, he said, for the first 2 years of the delivery, which I don't know if that starts next year, the year after, or 2025, he didn't specify. but this is probably a multiple year contract, probably at least a 5-year contract ending in 2030. The first 2 years of the contract, the ceiling price for that market reference cost for the utility, $55 a pound for the first 2 years. For all of the years after that, $78 a pound. That's what the utility and the producer agreed upon as a ceiling. And so the producer is like, hey, I'm not going to sign this contract with you unless I get substantial exposure to the rising spot price in the coming years. And that was the price they settled on, $78 out past the first 2 years. So if let's say that contract starts in 2025, who knows where the prices will be at 2025? It's likely that the utility will be paying that ceiling price. But this is just where we're at currently. This is an example of the types of contracts that are being discussed, and in this case, being actually signed. The producers are fully aware of where the price is going. So I just wanted to let you know that. And like I said, I'll link to that clip from GoVX from Daniel Major in the show description. And this is just a sign of what's to come in terms of the price of uranium, what producers are expecting. And just to go back to that question that I had about this channel and what I intend to do in long form interviews, we actually essentially do long form interviews for our members in the once a month members webinar that we do. We had the CEOs of the CEO and the director of the board of one of the companies that we hold and recommend in November's webinar. In October's webinar, we had the CEO of Sprott, John Chimpaglia. We do long form, an hour plus of Q&A and give these folks a platform to speak to our members in depth about their company or about the uranium sector or both. So in essence, I am already doing that, but because of the time that it takes and the effort that it takes for us to conduct these webinars and conduct these long form interviews and arrange all of that, we keep that for members only. But this channel will continue to be daily updates or almost daily updates about the pertinent sort of info in the sector, and especially the daily moves in the price of uranium and the flows. And again, once in a while, I get to kind of wax poetic on investing, on investor psychology, and hopefully that's been helpful as well. All right, hope everybody's doing good. I'm going to go enjoy the rest of this rainy day in California, which is we get about 10 of these a year, so it's kind of nice when it happens. Hope everybody's doing well, and we'll see you tomorrow. Cheers.